Next is Apple. Apple is, this is Friday the 2nd that we are recording this. When I looked earlier, just about the only stock that was down in the S&P 500 today, and that's always a sign that there's had an earnings report the day before. I thought this earnings report was all right. I'll break cover on this. But the market didn't quite agree, so make of that what you will, Steve. I mean, I can sort of see this both ways, in fairness, but here we go. Revenues came in at 68.7 billion, which was 2.7% higher on the quarter than the year before. Higher, but not by much. Earnings per share was 7.8% higher at $1.65. When I owned this stock not so long ago, my basic thesis was, look, growth in services is going to come through. It's going to push margins higher. And what you will see is, yes, that revenue line will be slowish, but the profit margins will widen and the bottom line will grow much faster than the top line. That's sort of happening. So services revenue was up 11.6%. One reason the market might not have loved this, I'm not exactly sure what the reason is, maybe it's a combination of these, is that was actually slower than it was before. So it reached record levels, and Apple points out that it reached record levels, but to some extent, it ought to be reaching record levels. It's a growing business. You shouldn't be going backwards at this point. But products growth was 2.7%, so a lot slower, kind of in line with the overall increase here, I think. But you got wider margins as a result of services going higher. The big positive, I think, was that iPhone revenues went up. They don't report out number of iPhones shipped, but they did say something related to this a bit further back. Other categories were kind of more and less interesting, but the real big kind of thing for Apple is getting iPhones into as many hands of people as they can and then charging service revenues for companies that want to launch apps at them and try and sell them things in the style of a sort of big marketplace, like they want to charge Alphabet to be a search engine, but that's not really allowed anymore. China revenues were down because, well, China, innit? And US revenues were, North America, I think they call it, revenues were up around 8%, which is reasonably encouraging, I think. They've chipped their share count down again over the last year by sort of 2.5%, which is about what you might expect, but it all helps boost earnings per share a little bit. The big issue for them is that, well, two things, I guess, that were big. One positive, one less so. They've announced big plans for kind of reinvesting. 100 billion is going to be invested into whatever they can find to invest it into. And the way Apple's been going, you might wonder, because they've not been big CapEx people as far as AI goes, and the market hasn't really enjoyed that. You can see that one of two ways, I guess, but they have now either got sucked into or decided to participate in, you choose, the kind of AI CapEx arms race thing here. And they do have a big balance sheet that's available to do that kind of thing. They're also guiding, though, for some quite high costs, and this is the reason that was kind of making the headlines. Tariff-wise, they're worried about 900 million in costs, and that, by any standards, is quite a lot. 900 million on, yes, quite a lot of revenue, but that's a big number to add in here. It speaks to quite a few things. I mean, that's partly the reason for, I think, the gross margin miss on guidance that was slightly lower than analysts were expecting. Make of that what you will. I don't really have a forecast about Apple's gross margin, but there you are. So they're expecting a bunch of costs coming this way. They mentioned, however, though, that nearly every iPhone that's sold in the States is actually now made in India. They're busy shunting their production away from China to places like Vietnam, to places like India, as a way of kind of getting around these tariffs. Whether they were doing that anyway, in fairness, Apple had been having issues with its presence in China for some time and looking to move its manufacturing base to India before the specific announcement of tariffs. You might have thought the trade war was kind of building anyway, but they had been trying to work around this for a little while. That's an expensive business. It doesn't come for free, setting up manufacturing facilities in other areas. We might have to come back to this tariff thing in a bit, Steve, but I thought this was kind of okay. The trouble is, I don't sort of see Apple at the moment as priced for kind of okay. This is roughly what I was expecting, but the price tag is higher than I'm willing to go on this one. So I don't mind anyone knocking it down, but I'm not quite sure what they were expecting that was better if they were buying it beforehand.
Yeah, I think I think Apple needs the next thing to come along to get investors excited again, and they thought it was going to be the silly headset, which I think has made a swift disappearance from the website, and probably the only thing they're well, another thing they're not making in China or anywhere else in the world. There was a few things in here, Steve, that stood out to me as being particularly interesting. Um, Pretty decent beats on iPhone, Mac, and iPad revenue, and but under, sorry, on wearables, and also under on services revenue, which is that was the, if we were talking about Amazon's crown jewel of the business being AWS, services revenue was Apple's crown jewel, and to see that miss is is probably the reason for the fall in price on the week, because I would imagine they're expecting that. The other sort of things that would have put jitters in investors, I would imagine, are the obviously the announcement of how much the tariffs are damaging in terms of costs to Apple, but also how unsure they are about what happens to tariffs in the next sort of quarter or two. And I know nobody knows, but I think there's an element of pretending to know. Apple didn't do that, and they just said it was too difficult to predict. One last thing that I would just sort of circle on that, and then we'll look again at the numbers and give an opinion on that was that Cook didn't think that this was sort of growth pulled forward from the threat of tariffs, obviously raising the prices of all of this Apple tech, and I disagree with that, Steve. I think there is a sign here of growth pulled forward. These are really high ticket items. A 10% tariff or an 8,724% tariff, whatever we are in the war with China, would make a huge difference to some of these products. And I know some of the other Asian regions, I think, are on a slightly higher tariff as well. Then the sort of the Trump trade office blanket tariff that he was trying to put on, and whether they stay on or whether they resort back to this 10, or whether the 10 gets up to 5 or whatever. It's a lot of money to go on these tech products. So I think there is an element of growth pulled forward here, and that it might weaken out over the year. But again, we'll have to see. Cook said there was no evidence of that. I'm not 100% sure on that. 100 billion in buybacks to come, Steve, which is an incredible number, but it's actually down from last year, where they did 110 billion authorization. Dividend was up, Steve, to 26 cents per share, but it's still a nothing dividend. And yeah, like you, Steve, I thought these numbers were fine. I mean, in the same way that we thought Amazon's numbers were fine, these are slightly more fine. Are we saying this is a company that demands this big premium over the market as a whole here? No, and I'm not really sure where this next leg of growth comes from, because services is already starting to slow down, and we've seen the Apple have now been forced to allow apps to be able to have their own sort of purchasing system within the apps. Apple still has to approve it, but it avoids that big Apple tax that all of the apps had to pay for being part of the store. The only way you could pay was through the Apple Store, and Apple took a huge chunk of that revenue. Now that's kind of been overturned. We're going to probably see the ramifications of that moving forward as well, Steve. So yeah, I don't think it's grossly overvalued here, but I think it is a little bit overvalued, and it's been a long while since I've had any interest in buying Apple. I was interested in buying it when you were, but I just couldn't get my head around various parts of the business. And I think that pretty much continues for me here, Steve. There's nothing in here that gets me excited about where the business is, and there's certainly nothing in here that gets me excited about where it's heading. And I think that's the big problem I've got with it, Steve. Does that make sense?
It does, yes. You're right, by the way. You picked up where I went wrong here. I'd written 100 billion announced, and for some reason I thought that was capex. It's not. It's the buyback. You're right there, because I've written it next to where they chipped down the share count and meant to say they're going to carry that on with another 100 billion. The thing that stock wise, I had this idea this morning, and I think this is wrong, but I was sort of in my head wondering whether, largely on a PE basis, this is another version of Costco, where if you look at its sort of growth numbers, it doesn't really justify that multiple. I don't think Costco does either, and I don't think anyone really thinks Costco does. But absolutely no one wants to bet against it, and you can see why, because it keeps going kind of higher, and it is strong in kind of many ways, but nonetheless sort of trades at basically impossible to justify on the basis of the money the company makes. To be fair, it was actually down about 6% when I had a look, and on a day where the market in general has been moving higher, that's actually quite the swing. It amounts to about 8%. That's a bit more of a hit. That's, if you just think flat and then down 8, that's quite the hit, actually, that, not including that differential. So the thing that really surprised me about this was that stuff about tariffs, for two reasons. One is that I thought Apple was largely well around this, because there was a basically what I thought the other week was mostly an Apple exemption clause built into all the China tariff stuff, saying that, yeah, if it's a smartphone or a laptop or has a semiconductor in it, then we're not going to tariff that in any extra way. And I thought this has a lot to do with the fact that Tim Cook has actually been contributing to the Trump campaign, or is at least reasonably friendly with the government. Yeah, you can make what you like of that idea, but I figured that has something to do with it. And yet, we still have a kind of situation where Apple is presenting news that I think is worrying the market about tariffs. So that was a bad guess on my side here. I think all the talk about moving the manufacturing jobs to the US, this fairly clearly shows that isn't the case. I'm not convinced that there was ever the ambition. I don't think there's anyone in the US who wants all these iPhone manufacturing jobs. To be honest, people don't want to work in those things. And I heard people complaining this is going to result in $3,000 iPhones because the cost of manufacturing in the US is so high. My reaction at the time was no, it isn't, and no, it won't, because they will move their production to, I thought, Vietnam, that mostly India seems to be the answer, and they will make them at about the same cost, just not in a place called China, and then they'll ship them in without tariffs, so you won't see a meaningful increase, at least not on the basis of costs, whether they push them higher. Is another question. You said they're looking for the new thing. The next thing, according to them anyway, and this will not encourage you, Steve, is basically the old thing again. Tim Cook was picking up their new iPhone and their new MacBook, and I'm sure they're pretty good. They have no doubt some improvement on something. The CFO, Kevin Parek, I think, said their installed base is now at an all-time high for devices. That is important. It's something I've been guilty of overlooking in the past, in fairness, and largely focusing on that services line. And sort of knowing deep down, but not really paying enough attention to the fact that that services line can't and won't grow if the product line keeps going down. You might think services are like number of cigarettes you sell, and products are a number of people that smoke. And you can't just think, well, I only care about the cigarette volumes thing, while the number of smokers keeps going down and down and down, because eventually it will go off a cliff, because the product growth or number of iPhone users will drop to a point where people will just stop thinking the services are worth it anymore. But encouraging that they're at an all-time high there. We will see about demand pulled forward. It's an interesting idea as to whether they might be an example of the kind of thing I was talking about back in Amazon, where things have seen stuff yanked forward and now it will kind of settle down, especially in an iPhone, because people won't necessarily come back for one of those in a quarter or so. They'll be coming back in a kind of year or so. So if anyone was thinking, well, it's either now or 6 months, and I don't know what the tariff situation looks like in 6 months, I better go now, that will really show up in the rest of the year, won't it? So that'll be good and interesting to see. But yeah, I thought this was kind of largely fine. You've been watching a segment from the Playing FTSE show, brought to you in association with our favourite broker, Trading 212. For the full version of the show, check us out on Spotify, Apple, or wherever you get your podcasts. And if you open a new account with Trading 212 using the link in the description, there's a free fractional share in it for you. Just make sure that you use the code FTSE when you sign up. Terms and conditions apply, and do remember that when investing, your capital is at risk.